I believe that, and I said at the time, as you probably know, right around the bottom, under 5,000, somewhere between 48 and 4,900, I raised my target to 8,000 from 7,500, which had been raised several months ago. And while everybody else was lowering targets and talking very bearish, I was seeing that sell-off as kind of the refresher, the thing that, pulled all the optimism out of the market and basically built a wall of worry that allowed us to have another leg up. So I became even more bullish, and that's still my stance today. We've had a remarkable recovery from that April low, whatever date that was. We retested, people talking about a retest all the way up. And I said we had that retest when we went back to 5,100 after, we rallied for a week or 10 days and then went back. So we've had the retest. I don't think we're going back there. I think we are in the new bull leg, the final bull leg that I think will take us to that 8,000 top. I have said more than once, even 8,000 may be a conservative number. I am very contrary right now in terms of bonds. I mean, the vast majority of people are very nervous about the bond market. There's lots of calls for, 10-year to go over 5 and 30-year to go much higher than it's been. And, there's a lot of bearishness. When you look at the measures, it's the kind of sentiment you see at bottoms in markets. So I think we're very much in a bottoming bond market here. And surprisingly, we topped out on rates over a year ago at 5% on the 10-year and a little higher than that on the 30-year. And surprisingly, we're down in 4.5 on the 10-year, and yet people are more bearish than they were then, practically. So I think we are looking at a big turn in rates here. Again, this is very non-consensus, but I do believe we're going to see through this summer and probably through the balance of this year and into next, maybe much of next, rates coming down. I wouldn't be surprised to see the 10-year down below 3% by fall, and maybe even as low as 2.5%. And I wouldn't be surprised to see the 10-year at 0 in the bust. Part of that is going to be the response to the bust will be massive money printing. So even though they'll also be borrowing, the Treasury will be issuing a lot more debt. Central banks will be buying every bond that's out there and trying to monetize it, trying to get money into the system. So, but that's later. Earlier on, I think the rates drop because I expect the economy to slow. The tariff thing definitely took its toll, and there are people who are thinking, the market's held up here. So, the economy's held up here, so maybe it's not going to take its toll. Now, I think we had buying ahead of tariffs. So, you look at short-term numbers and you say, the economy's doing okay. But as we move through the summer, I think it'll be more apparent that there was some slowing caused by the tariffs. And some slowing means we should be in negative territory on the economy, I think, this summer. And as that becomes apparent, I think you'll see rates come down. I'm a big bull on the miners. I agree they've been disappointing and lagged the metals, both gold and silver. People are much more negative about silver as a metal, but silver's actually come along. It's pretty much kept pace with gold. Normally it outpaces gold in a bull market, so that's a little disappointing, but I think that's about to change. So you're going to have both silver and gold, I think, moving up pretty aggressively. And I think the miners have had some headwinds in terms of, costs, trying to work through. Mining is a tough business because it's getting tougher and tougher to find the metal, and so it's more costly to find it now, more costly to mine it. So they've had some of that in terms of the earnings haven't really kept pace with the price of the metal. I think as the metal moves up here, it opens up a lot of room for them to leverage up their earnings. And so I am very bullish. I have targets on the mining ETFs that have been long-standing. I have a target on GDX of 65, a target of 100 on GDXJ, which is the junior miners, and on the silver side, 75 for SIL, 35 for SILJ, which would be almost a triple from here. So I obviously have pretty bullish expectations going forward, and I think those targets could be reached this year. I don't provide any macro strategists. I have to stay away from advice or recommendations. But that being said, everybody has to make their own mind up in terms of what kind of risk they want to take on and how risk averse they are and how they handle sell-offs, etc. I think emotional reaction is different in different people, so that's an important factor. But all I can say is if silver indeed can go from 75 back to the low 20s, that's an awful lot to give up just because you don't know exactly how to get in and out. I think it's always wise to not be greedy. Yes, it's a long secular bull market, but there's a pretty big cyclical bear in there if I'm right about the bust. So, gold's not as volatile. So gold, I think, maybe less of concern that you buy and hold. But with silver, that's a lot of volatility to withstand. And for most people, having watched for 50 years how investors respond psychologically, if you have silver go from 75 to low 20s, it's not like it's going to be easy at that point to buy. I mean, you could get in, then get out at 75 and ride it all down. So you have to be really cognizant of who you are. But also on the other side, on the buy and hold, you could hold it all the way down and say, yeah, I believe in that long-term story. If it goes from 75 to 20, there's a lot of those believers at 75 or who are non-believers at 20, and they sell. We see it all the time. People buy at the highs and sell at the lows. So I've said this about the overall market because, I'm calling for an 80% bear after this big run to the top in equities. This is one time. I know the mantra has been in place since the mid-80s. It's time in the market, not timing the market, that's been the key. And that's been so true. For those that bought an S&P index or whatever back in the mid-80s and just stayed with it and listened to that advice, they've outdone most people. It's been great advice, or it's been a great way to invest. The problem is we're heading into a very different period here where it may pay to time the market, partly because of that psychology, not so much to try to be a trader or think you're smarter than other people, but because that decline could be so large and psychologically could really beat you up and cause you to do 180-degree wrong turns. You hold at the top and then at the bottom you sell. So I think we are entering a period here in the next 6-9 months where it's going to pay to probably ignore that it's time in the market story and go with timing the market. People should be aware, if I'm right, and again, I'm pretty confident these are high conviction forecasts. If I'm right that we're headed for S&P 8,000, NASDAQ 27,000, Dow 55,000, and Russell 3,300, those are my targets for this year. And probably sooner rather than later, meaning doesn't mean the end of the year. It means probably end of summer or early fall, somewhere in there. Doesn't have to, but that could happen that fast. If I'm right on that, those that are so nervous right now need to understand that yes, we're in kind of a funny period where, yes, we're within months of maybe the biggest bear market we've had since 1929. At the same time, we're still, 30 or 40%, in Russell's case, 50, 60% away from the top. And those are returns, if you talk about it as 30 to 60%, those are returns that would normally take you, 2, 3, 4 years to get. Yeah, you might get them in the next 6 months. And so you have to be aware that we're in an unusual period where you're going to have very fast returns, very big returns very fast. So it's not as easy to say, well, we're getting close time-wise. Maybe you need to get defensive now. Because what I predict is that a lot of people who are defensive now or get defensive now will be forced into the market if we're, up another 30%. They're going to think they missed it. And people never realize at the top, it's not going to be at a top because everybody's aware that things are going to get bad. It's going to be at a top with everybody telling you this thing has a long ways to run. They're going to be telling you that the cycle's just beginning. There's another 3 years to go. And you're going to sit there and say, I can't afford to miss this. It's too strong. Psychology will pull you back in. So if you get out too early, you may be forced back in at the very time when you should be getting defensive. So I just put that out there as a thought process for people to go through in a period like this. And you're going to have plenty of advice from people. The same people that are going to be telling you to be defensive now are going to be the people telling you to get in at the top. So you just have to be careful. I use the term ignore the noise, meaning there's a lot of advice that gets provided on Wall Street and elsewhere, and certainly on social media these days. And just understand that an awful lot of that will be proven wrong, as it always is. I'm a contrarian for a reason. Psychology has most people, maximum bullish at the top and maximum bearish at the bottom, as we saw back in early April. I stand behind what I said. I really think people are unrealistic about and don't really understand what the Trump administration is trying to do and how difficult that is. Not just tariffs and trade policy, but also with the budget deficit and with, DOGE, what they're trying to do in terms of bringing government back into a real world efficiency, which they haven't been in for decades. He's also taking on immigration. Obviously, he's accomplished a lot there, doing a lot of things on the social side in terms of what had become kind of off the rails wokeness in this country. And if you look at previous administrations, typically kind of one step at a time, let's take on this, maybe we'll do this down the road. He's doing it all quickly because he knows he's got, at best, 4 years and maybe only 2 years to get a lot of this done. And, he's not getting a lot of cooperation from everybody in Washington, to say the least. He's got some loyal people in Congress, but even on the Republican side, there are people that are establishment that do not want change, and they're fighting it. So I think when you take all of that into account, you have to look and say what he has done so far is amazing. The tariff thing, for example, obviously we just had this ruling overnight. Some people are seeing it as a positive that it takes away the tariff threat, which, some on Wall Street don't like. But I think ultimately you're going to find he may win on appeal, and if he doesn't win on appeal, listening to some of his reports, people that report to him, they're dealing with trade, they have plenty of other avenues to go. And if this does get, if this ruling stands up, I understand what he was trying to do with this, in terms of putting it in that emergency category and trying to get it done that way. And the courts have ruled that this isn't an emergency. Well, they're saying when you look at how many deaths are coming from fentanyl, and you look that's a deliberate effort on the part of China to push fentanyl into this country, and to obviously Canada and Mexico are the avenues where it's coming. So they can still argue that this is an emergency, and I think have a very good argument, and they seem confident they'll win on appeal. Whether they do or not, there are other avenues. This is not the end of tariffs. There are those on Wall Street. Obviously, the market rallied this morning thinking, oh, that's off the table now. I think Wall Street's wrong. They should be rooting for tariffs, or at least a tariff strategy. What ultimately is the goal of the Trump administration is freer trade, not higher tariffs, not, trade wars. But it takes negotiation to get there, and that's what this has been. That's what I think a lot of people do not understand or underestimate in terms of the effort being made. They take it at face value, particularly when you go back to early April and the panic on Wall Street. The funny thing is, he's trying to convince trading partners that he means business. They may not have been so sure he meant business initially, but Wall Street sure thought he meant business and believed at face value that he was going to increase at those levels. And I all along said, just let it play out. This is all negotiation. And that remains my view.